I don't think they want to do anything today. I think the overall tone of the press conference will be dovish, but there's still a lot to digest. There's still a lot to assess. What does the new Fed strategy mean? How significant is the drop in the August core inflation rate? Was that due to erratic factors, or is there more behind it, and so on and so forth?
Let me ask you about what you think of why the inflation reading was so low. Was it erratic factors, as you're saying, or is that like a trend?
That's part of the story. I think summer sales and more generally, we have seen a lot of volatility in core inflation over the last couple of months. So it's too early to say whether this is indeed now the beginning of a more significant deflationary environment or not. At the same time, we're in the midst of a big recession. We're recovering, that's for sure, but the level of activity is low. So yes, we could see more disinflationary pressure at least coming through, and that would of course imply that the inflation outlook changes again for the ECB.
Let's then talk about when you think will the ECB act, because I think that they have to act at one point in time, given what we heard from Philip Lane, might be quite clear, right?
Yeah, we think that in December they will announce an increase of the purchases again, just to make sure everybody understands that they are willing and stand ready to provide the fiscal space needed for governments to do the heavy lifting. We all agree, I guess, that it's fiscal policy which is much more effective these days to support growth. At the same time, the market needs to get that signal that there's not going to be a liquidity issue for any of the peripheral countries or any country at all. December, they get new numbers, new projections. I think is a good point in time to announce that.
Talking about fiscal stimulus, we also have to talk about Italy, because clearly the Italian debt burden will skyrocket at some point in time pretty soon, and with looming credit rating downgrades. How much of a concern is that, you think, to the ECB?
Well, at least officially it's never going to be a concern, but of course it's important that there is not a spread widening that would endanger the transmission of monetary policy impulse to every country more or less at the same rate. So I do think that it's important that they signal to the market, even though Italian debt will go up quite a bit, 20-30% percentage points, that they signal we still stand ready to refinance and to make sure that whatever net issuance is coming, we will absorb.
So in other words, for investors in the debt markets, probably yields are not going to rise, even though there will be more debt coming.
You would need to see quite a bit of inflation for that to happen. Then the risk premium at the long end of the curve would go up and all these kind of things to happen. But if inflation stays low or even gets lower, then it's just very hard to see how interest rate could rise anytime soon.